Welcome back. This is going to be the watch list for Monday, June 16th. So let's go ahead and start with the economic news. Monday, we really don't have anything. We'll have Empire State Manufacturing Survey that's going to drop before the market opens, but that really shouldn't be a market mover one way or the other. But what we're going to want to watch for is later in the week, a couple of things. Tuesday, definitely everything around retail sales. So are the consumers still consuming? Or are they cutting back on their spending? We're going to get the retail sales. We'll also get it minus the autos. And then we're going to see some import prices. So are the cost of goods coming into the United States moving up in price, or are they still somewhat holding steady? As I've mentioned before, what the street is looking for is, because of tariffs that are in play, are companies passing on those higher costs to consumers, or are they just eating it and absorbing it into their margins? The other thing we're going to want to watch for is business inventories. What are they doing? And then home builder confidence. So what's going on with housing across the nation? Why housing? Housing is the number one contributor to overall inflation. While you might think that it's probably gas or groceries or clothing, it's really what is the cost of housing doing. Now, if you've been watching the housing numbers, there are more homes on the market today than there have been in years. But the biggest issue we have is interest rates are just too darn high that are allowing people to afford homes that are now in the very high six figures, some of them in the seven figures. On Wednesday, we're going to get housing starts, building permits, and then what we're going to want to look for there is, are the builders starting to slow things down? So they're sitting on land. Are they still applying for permits? Are housing starts still moving forward? Obviously, we still have tariffs with Canada, which is where the majority of lumber comes from in the United States. So again, this is all going to lead into the bigger macro picture of what is happening to inflation with the consumer down the road. And then most importantly is going to be jobless claims. And then we have our FOMC interest rate decision and the press conference with Jerome Powell. Now, my estimate is that the FOMC is not going to lower rates, especially in light of everything that's going on with tariffs, the concerns in the war in the Middle East between Iran and Israel. So my guess is they will just stay steadfast. Now, Wednesday will be a day that I will not be trading in the morning, and I would encourage you to not trade as well. There really is no upside benefit to doing so, and you don't have a competitive advantage. You're actually going to be at a loss. Why is that? Because volatility and the cost of premiums will be super expensive. So then, even when you get a move directionally to the upside or to the downside, your premium doesn't move. And then if you're on the wrong side of the trade, the decay of that or the degradation of the value drops exponentially. Trust me, guys, I've been doing this for about 9 years now. There is no reason to trade the morning of FOMC. Now, if you want to show up when Jerome Powell comes to the podium and starts to speak, gives his thoughts, his comments, and then trade after the press conference, then by all means, that makes much more sense because the market will then have a definitive direction of the news. But leading up to the news, you are just putting yourself at risk. Thursday, nothing scheduled. We do want to observe the Juneteenth holiday. And then Friday, we have the Philadelphia Fed Manufacturing Survey, again, moot point, and then some U.S. leading economic indicators. So the big news event of the week is going to be on Wednesday, June 18th, okay, FOMC day. So let's keep an eye on that. Now, let's also note what's going on with the overall ETFs, and we'll start there. So SPY, my price levels have not changed. I haven't added any. I haven't removed any. These are really holding up nice, and they are on the money solid, right? You can see over the last several days, whether we're going to go back here to Wednesday where we were holding this 599 level. We pushed down in the after hours to 597 and then all the way back up holding 602. And then we came down to hold 596 on the after hours. And then also all day on Friday as we then also moved lower. So levels are in play. I really don't have anything to add. Do note, though, that over the last 4 days, we are in a downtrend. A high, a low, lower high, lower low, lower high, right? We want to see, are they going to make a lower low, or are they going to just start to recover? Now, we are also at the same level, pretty much within 2 to 3% of all-time highs. So when you have this, you will just have market oscillation from a low to a high, to a low, to a high, to a low, back to a high. Okay, this is what's called trading in a range. And when you are trading in a range, nobody wants to be short, and then also nobody wants to be long. So therefore, you don't see premiums really moving as quickly as you would like. And then also when the VIX is below 15, which is where it's been until recently, it just spiked back up above 20, premiums aren't moving very, very quickly. Let's take a look at the Qs. Same thing, we're in somewhat of a downtrend. We'll want to see, do we hold this downtrend to keep moving lower? Or will we start to just stay back within the overall trading range, which is fairly narrow, right? They can't seem to get and hold for very long above this 530, and they're not really breaking below this 521. So for the past week or so, we're just oscillating back and forth here within a range. So what you would want to do during this time frame is reduce your position size, and then this is where you're also seeing a lot of whipsawing in the market back and forth one direction versus the other. Let's take a look at some of the other names, individual names. Let's take a look, and we're going to start with Apple. So this thing has been really struggling, and I've been talking about it for the last couple of weeks, where, you know, it's just stuck here between this 202 and 192 level. You know, we just keep going up and down, up and down, up and down. And then we're also seeing it also on an interim daily basis. They buy it up on the open and sell it off. Buy it up on the open, sell it off. Buy it on the open, sell it off. I mean, it's a reoccurring pattern. Buy it on the open, sell it off. So when you're trading individual names, be sure just to go and see what have the patterns been for the week in which you're trading. You'll see that history is repeating itself every day, right? Back here on Wednesday, bid it up, sell it. What did they do on Thursday? This is actually a kind of a little bit of an anomaly where they took a dip, bid it up, and then they sold it. Going into Friday, bid it up and sold it. And then what did they do in the pre-market? Bid it up, sold it heavy. Same thing here on Tuesday, bid it up, sold it, right? And this is just what they're doing, bidding, selling. And so they're trying to get you caught on the wrong side of the transaction. So just being overly patient and waiting to see what they do makes more sense. Now, we're kind of between these levels here, and this is a wide zone. This stock is, been acting a little bit wonky lately, and that it's not giving you as clear of defined levels. So right now, I would say I wouldn't do anything. We're kind of where they were holding this 197. We failed it. Possibly a bounce here at 195, but if we fail this, then down to 192 and then to 190. I think that's the best way to go ahead and trade Apple. Let's take a look at Tesla. Tesla, ton of news, right? The drama between Trump and Elon. Obviously, this is where Elon started tweeting, and then you see, the huge dump. And then what do? They reverse it higher, and we are now back at this level between 326 and 313. So for this one, again, I would just wait for it to come back to a level. I really don't like anything that's in the pre-market where I would set a level at 318. You can keep an eye on it, but if the market is weak, let them, push this up and then come lower or come lower and go up. Now, what this is moving on is robo-taxis, right? So he's now talking that robo-taxis will be out and about on the street sometime in June or July. So the entire market sold off on Friday, again, over the crisis in the Middle East, and yet Tesla is rallying up. Everything is red except for Oracle and Tesla. So again, this will act more like a meme stock, and then again, if the news flow doesn't follow through with robo-taxis, then you'll see this thing probably come back down. But wait for your levels, and I think you'll do just fine with that one. Let's take a look at Amazon. Amazon, be curious to see if this follows the lead of Oracle. They had really good data center numbers that came out this week, beating expectations. You'll note that they do not want to lose this 618 fib level. They get to it, they bounce it, they come down to it, they bounce it again. If they flush it, They're getting right back above it, and then they are holding this level. So my 211.66 and the fib level 211.52 is a really strong level where you could probably consider, if we get some good news, going long, right? We don't have any sellers until up here, and then we have a ton of buyers. So you're going to have to ride this thing down if you go in to calls and the market becomes weak, probably letting it dip down into where more of the buyers are at. Ultimately, the better long position is this 204 area. So do keep an eye on that one as well. Let's take a look at Google. Google's been also back and forth. This has been just kind of another one of those pump and dump where they will dump it and then pump it and then they're dumping it again. But we're pretty much right back at the 50 fib level. I would wait and see if this one has relative weakness to go short. I don't know that there's really a lot of good news behind Google to keep this thing moving higher with their Justice Department, their overall acquisition they got going on, their overall issues around search, competition, AI tools. It just seems like they have the cards stacked against them. Now, they did do a really good recovery, from where they were, at the all-time highs, making up at least 50% of the retracement. But again, if tech catches a bid, don't fight this. So again, on Friday, we were able to move up here in Google, just like we did Tesla, while everything else is kind of heading lower. But we are below my level of 174.69. If they lose this 50 fib, I think you could just definitely play it for the short down to 171 and possibly 168. Let's take a look at NVIDIA. Chips have been roaring higher. It's been crazy how the semis have been bought up like nobody's business, especially AMD. But we're trading right here back within this channel, right? It's kind of a nice defined channel between 144 and 141. We push up, we come down, we push up, we come down, back up, back down, right? So this 141.80 is a really good level you can trade off of. Do note that when they get below it, they buy it right back up, or they get below it, they buy it up. Same thing, big wick, big wick, big wick. So use the 200 SMA as your target, that if we're going to come down to this, right, then use this as a potential stop loss. Now, 141.80 to 141 is nothing, right? So you can even probably let it come down here to 139 and then decide if you want to average into the position. Let's take a look at AMD. Super strength on this one as well, but they don't want to lose this 115.43. I mean, look at this in the after hours and then all day on Friday, and now we're kind of bouncing it again. So if semis are strong, I think you're good to go ahead and use this 115. Now, if they push it up here to 119, what I would watch for is a big head and shoulders pattern, right? Where they are eventually then going to dump this significantly lower. But right now, we were on this uptrend. They kind of broke it, but they're holding right here at 115 and change. We do have a pretty decent gap down below that will eventually get filled at some point in time. But AMD has definitely been resilient. So if you're going to try to short this or NVIDIA, just know that you might be very short-lived in those trades. So keep your stops tight. Let's take a look at Boeing. Boeing, news in the media with their 787 Dreamliner, the issue that happened with the plane crash in India this week. We did take some puts on this one. They were okay. I mean, we didn't do great on it because there was just too much of a wide bid ask. So you had to sit in this trade actually overnight. We took some puts up here where we're able to get a reject right on the market open, but then they pumped it higher, and then those puts really started to pay if you held them through Friday, okay? And now weakness, but it really seems like they're buying this thing right back up, thinking that, well, the Dreamliner is, an important piece of Boeing's business, but it is not a major cash cow contributor like the 777s, okay? So again, if we get back down here to 197, I think again, you could take a long trade on this one to move higher. If they break below, wait for them to break below, and I would you can start your put position, but just be ready to get stopped out if they bounce right here at 195.46, okay? This was a candle pivot low back in here in May, and then you'll see they use that same level here on June 12th, and then they use that same level here on Friday. Okay, so this is going to have to be an area that if you go short, you have to get below that in order to really get it to flush higher. And then you could also see it's the previous month mid level as well, which is why that thing is so strong. And then we do have buyers down here. So again, be cognizant of that short term. We have some sellers, but the bulk of the sellers are up here at 215. So I hate to say it, but I like this as a long, and nothing wrong with that. Okay, let's go ahead and take a look at United Airlines. I'm going to cover just a couple of the other airlines. These things have been crazy. So they start on weakness in the morning, and then they buy it back up. And they did this on Thursday, and then they did it on Friday. So on Thursday, as Boeing is dropping, they're buying United. Boeing is dropping, they're buying United. And then they did the exact same thing. So these price levels are really solid levels that you could trade against. Look at this right here, 75.81. This is a great level here, 72.92. Okay, they got to get above the channel to move higher. And then I don't have any real resistance up here to the 50% fib for UAL. The other one to look at is Delta. And they were doing the exact same thing with Delta. They're selling off on Boeing, and then market opens and they buy it up. I mean, it was so intriguing to watch. They sell it off and then they buy it up. So watching how we hold this level right here, also in Delta 47, I think we could definitely take this back higher. So what is driving also some of the sell-off in this is going to be the oil stocks, right? So when we're watching stuff like XOM, that the cost of oil is definitely going up. Now, notice you have a great trend line here also on ExxonMobil, okay? So if we come here and we just ride this thing straight up, right, you can just kind of see how it's riding this trend line all the way higher. I do like these oil stocks that if you should get a pullback to 110, I think you could definitely take a call trade, and we have a nice gap up top. Now, if we were to go back in time and take a look at this thing on a higher time frame, you'll note that that's exactly where Exxon loves to trade. Look at this right here, right? 105, we come up, down to 105, come up, down to 105, come up, right? We're in these channels, very well-defined channels, 110, 110, okay? Where are they rejecting it? 110, 110, 110. Pull back here to 110, go long up to 120. CVX is going to be the other one, Chevron, and Chevron's probably a little bit more appealing because they have an even better dividend than ExxonMobil does. So people aren't going to definitely be bailing on this stock anytime soon. I think when I looked at it on Friday, that the dividend was 4.25%, 4.5%. So again, I'd like to see us pull back to 143, where I think you can definitely take a long call trade position. And then ride this thing above 147 and then push all the way up into the gap fill. So on, again, Thursday, we had some settling going on. Then we had on Friday morning with the news in the Middle East, they sold it down and then the market opened and then they started to buy it up again. So these stocks move very slow. So just be cognizant of that. The other one that is Warren Buffett owns, I believe, over 30, almost maybe 40% of Occidental Petroleum, has a gap fill above. So this one will probably chase the gap. But look at this thing on a daily basis, you guys. It couldn't hold this level of 45. They flush it hard. They rip it up to it. They push it down again. We are now back above 45. So this is bullish. When Warren was buying, I'd have to go look at the proxy statements, but he was buying up here in the 50s and 60s, right? Thinking that this thing was going back up to 70s, 80s, 90s. Look at where it's been historically. We got to go to a weekly time frame to really see that. But, this stock at one point in time was $100, 110. We're less than 50% of that. So, and then oil stocks have been struggling, but it looks like we are getting a nice bounce here in Oxy. Again, the problem with this one, why nobody's buying this up, is their dividend is absolutely awful. They pay next to nothing. 24 cents. People aren't going to hold oil stocks that don't have really good dividends. But I think you could get a move to the upside with some overall momentum. And then lastly, I just want to talk about the banks. So the banks really took it on the chin on Friday, but we are back at some levels that make a lot of sense here. Banks typically run up into earnings, and banks are the first sector out of the gate to announce. So I think we could definitely pick up some relative strength on the banks. Citi is right here at my level, $76. My level below, 74, 73. But this thing held up really good throughout what was going on over the past week. Let's take a look at Wells Fargo. Wells Fargo had their asset cap lifted by the regulators, meaning that they can now grow the bank. They haven't been able to do that for the last 6 or 7 years. This is where the news announcement hit on the asset cap being released right here back on June 3rd. And then look at all the, retail people that bought on the news and literally got screwed. So again, I'm going to encourage you, do not buy stocks in the pre-market. There's no order flow. There's not enough volume to sustain a price level. And then you just end up being a bag holder. And then you can't be upset when you bought in at the top because someone bought at 84.96, right? Remember, every stock, buy and sell, there's a buyer and a seller. So somebody sold up here and somebody bought up here. I mean, who wants to buy at 84 and now it's trading at 72? I mean, you literally just took a 20% haircut for absolutely nothing. So this 72 level seems to be holding pretty good for a potential bounce. Let's take a look at JP Morgan. It's been super strong. This one, again, I would watch. Calls are going to be a little bit on the expensive side, but this 264, 265 for a play higher. But if we lose 260, right, looking left and going back here, if for some reason we lose 260, I would definitely be open to shorting this thing. You could short it below 264, but note that you're probably going to get the bounce at 262. Bounce here, bounce here, bounce, 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 bounce. We really got to lose this 262 to go to 260. Below 260, you can even head lower. And then the last one I'm going to look at is Bank of America. Bank of America rejecting perfectly my line of 44.46. So I really don't have anything. Let's go ahead and see if we have kind of an interim level in here that we could kind of play off of. So what I like to look for is, an area of consolidation, right, where they just headed lower. Here, we use it as support, support, support. Right now, we're kind of using it as resistance. So unless I can get above, 44.12, I would definitely probably be short this name because we are also still in a downtrend. So this one's not acting as well as a couple of the other banks that are at very well-defined price levels. If you get down here to 43.35, this is good for a bounce, or if you lose it, a short, and then to push down into the gap fill that still remains down here. So I didn't remove it just simply because we bounced off of a level and then this was all pre-market activity. So this is probably my least favorite of the bank stocks, that it doesn't really move very well. So those are all the things that I'm watching for this second week in June. And with that, everybody, again, remember, we have FOMC this week. Again, my advice is do not trade in the morning. Come back for the news press conference or come back the next day. You are not going to miss anything. And all you're going to do is pay up for expensive premiums that are going to chop. So with that, have a fantastic week, and I will talk to you all next weekend. Take care.